Section C, we shall be talking about the currencies and correlation. And this is actually a very big topic, which is going to help us to know more about Forex. So we shall look at what is a currency, then we look at currency correlation, then we talk about the major currencies, we talk about the cross pairs, we talk about emerging currency pairs, and basically the commodity currencies. So we are going to look at all of them and how they work and how they correlate and the spreads they carry and the currencies that we are going to be dealing with in our course so that we can build a profitable portfolio in Forex investment. First, let's look at what is currency. So we see that currency can be defined as an accepted form of money that is coins or paper notes which is issued by a government and saturated within an economy used as a medium of exchange for goods and services. So currency is the basis of trade. So each country has its own currency. For example, Japanese official currency is the yen, Europe is the euro, and this is used as the currency for most countries in the Eurozone. Of course, also the country where you are watching or taking this course from has its own currency. So what makes the currency more strong? We see that some countries' currencies are stronger than others. This is caused by the country's economy. This is caused by basically the country's economy and the political strength it has. So if a country is more productive to the world, its currency becomes more strong. And of recent, we are seeing China is also becoming extremely strong. The Chinese yuan is becoming more strong. China is growing economically worldwide, and it's almost becoming the biggest number one. So let's look at examples of strong currencies. We have the euros, we have Great British Pound, which is GBP, Canadian dollar, which is the CAD, and the United States dollar. Of course, we also have others which are stronger, but these are some of the examples of the currencies that we find that are really, really strong in the economy. Even the Japanese yen is also strong well, and the Swiss franc, the CHF, is also strong. So we shall be looking at them as we hold on with our course. About the currency correlation. So currency correlation is a statistical measure of the relationship between two trading assets. It shows an extent to which two currency pairs have moved in the same or opposite direction. We need to note this. Currencies moving in the same or opposite direction. These are our keynotes within a particular period. So understanding price relationship between various currency pairs allows to develop high probability trading strategies. So a trader can reduce the risks, diversify trading instruments, and improve hedging, as we shall be seeing in our practicals. So correlation is measured in decimal form on a scale of -1 to +1 to give you a figure named a correlation coefficient. So let's look at a positive correlation because we have two types, a positive correlation and a negative correlation. So a correlation of +1, which is positive, shows that the two currency pairs will move in the same direction 100% of the time. That is a perfect positive correlation. So for example, if we look at Euro USD and GBP USD, it is an accurate example. If one is trading up, another moving in the same direction. So when Euro USD is moving in an uptrend, GBP USD is moving in an uptrend. So let's look at the negative correlation. A correlation of -1 shows that the two currency pairs will move in the same opposite direction 100% of the time. So when we look at Euro USD and USD CHF, they have a perfect negative example correlation. So therefore, if the Euro USD is moving bullish, the USD CHF goes bearish. So a correlation of 0 takes place if the relationship between the currency pair is totally random, which implies they have which implies that they have no link at all. So that is where there is no correlation basically. So note that the stronger a positive or negative correlation, the greater predictive analysis. Long time frames used for technical analysis show more accurate information. So when the correlations are happening, you can easily tell what is going to happen to another currency. If the Euro USD is going upward, you can easily tell that the GBP USD is also going upward. So that's how correlation really works. We talk about the commodities that correlate with currencies. So let's look at the Canadian dollar and crude oil have a positive correlation. So due to the fact that Canada is the major oil producer and exporter, so Canada and oil, we know that they be moving in the same direction. So also the Australian dollar and gold, the XAU, the ZAR, they also have positive correlation. This is because Australia is a significant gold producer and exporter. So by knowing this, also you can trade in commodities. You can also go in the stock markets. If you know that the Canadian dollar is doing well, basically you find out when the oil is also doing well. The same to Australian dollar and the gold. So by looking at the currencies performance, you can know how these commodities are also performing. Let's talk about the impacts of currency correlation. So we see here, I'm giving you these 4 highlights. So you can avoid positions that effectively cancel each other out. For example, the Euro USD and USD CHF have a strong negative correlation. If you buy both Euro USD, USD CHF, it may result into a loss, because now when you buy one, you have to sell the other. So if you find yourself in position of buy, just know that it's going to affect your trades. So correlation forms a basis of high profitability forex trading strategies. If you know currencies that are correlating, I'm going to give you a list, I think, in form of Microsoft document or PDF of just currencies that correlate together so that you can know them. So amount of risk exposure in your trading account known, for example, if you bought all currencies that positively correlate, you know you will make profits or loss according to your analysis. So another thing is, if you buy Euro USD and it goes against you, you may sell USD CHF immediately to cover up your losses. Of course, you might say it with a bit longer, a bit higher lot size. But after doing a clear analysis, you don't just have to look at this, you go and sell that. No, sometimes there are other factors which can bring correlation not happen, e.g. economic factors. Some news can be released in Europe when in USA there are no news, so you should be extremely keen. Let's talk about the major currencies, and these are one where I want you to keep a keen eye, because we are going to be using them in our trading to become extremely successful. So the following here we look at the these major currencies. So we have the euro, pound sterling, then we have the Australian dollar, New Zealand dollar, United States dollar, Canadian dollar, and the Swiss franc, and also the Japanese yen. So this is the Japanese yen. So these are the currencies we have in majors. So we have the Euro USD, USD JPY, GBP, USD, OD USD, USD CHF, NZD, USD, and USD CAD. So these are the currencies that carry low spreads, and they have high liquidity, and they are stable to trade. They are not like other currencies that in emerging and also minor currencies and also commodity currencies. So these are the best currencies where we can make huge money from. So let's talk about the odd USD, and it's the pairing of Australian dollar and United States dollar. So the odd USD is considered one of the 3 most popular commodity currencies. So price action in this commodity pair is influenced by the price of Australia's natural resources. In particular, the price of gold is known to correlate closely with odd USD. So the countries is that we have Australia and United States. So the pairs that they correlate with is we have odd card, odd CHF, Swiss franc, and the Great British Pound and United States of dollar. The pair type is a major. So Australian dollar, of course, it exports a lot of gold, and when the gold prices are high, the Australian dollar is high, which means that the United States dollar is low, because when the gold is increasing in the price, the dollar is decreasing in price. So when we look at it, further details is that the odd is from Australia, the country where it resides from. The central bank is Reserve Bank of Australia. The nickname is AUS, and the average daily turnover is 7.6. And here we look at the United States dollar, dollar coming from United States, of course. The central bank being Federal Reserve System. The nickname is a back or greenback. Daily average turnover being 84.9%. So let's talk about the Euro USD, and this is the pairing of Euro and United States dollar. It's the most traded currency in the world. So accounting for nearly 40% of the total daily volume, making it too liquid. So it's highly sensitive to fundamental news, announcements, releases by the United States. So now the Euro USD is a good currency where we should be focusing our eyes on, because it has very low spreads and is a stable currency to move because of too many participants. So it is easier to make it through trading this currency. So the countries is Europe and United States. So it correlates with Euro card, Euro odd, New Zealand dollar against the United States dollar, and the type is a major currency, as we see. So a more detailed is that we look here, the country being, of course, Europe, the bank being European Central Bank. The nickname is Fiber, and the average daily return is 39.1%. And of course, we have already seen it's United States, and the bank is Federal Reserve System. The nickname is Greenback, and the average daily return is the 84.9%. So let's talk about the GBP USD, and this is the pairing of British Pound and United States dollar, also known as cable. So GBP USD is the third most traded pair. Price movements in cable are known to correlate with Euro USD. And so since the pair isn't as liquid as Euro USD, GBP USD experiences more aggressive price movements when the USD data is released. Yes, most of the time during the news releases, it experiences a lot of spikes, and also it moves very many pips in shortest period of time. So it also needs to take care when you're trading it. Specifically, you need to be having a good strategy. So the UK boosts the second largest economy in the Eurozone after Germany. So GBP USD is from United Kingdom and United States. So the pairs they correlate with is we have GBP New Zealand dollar, GBP Canadian dollar, and GBP Australian dollar. So the pair type is a major currency. Let's look at a more detailed way of it. So where we look at GBPs from United Kingdom, the bank is central bank is the Bank of England. The nickname is sterling or cable. The average daily turnover is 12.9, and here we see, of course, United States Federal Reserve System, back or greenback at 84.9% on average daily turnover. So let's talk about the New Zealand dollar against the United States dollar, which is the NZD USD, which is New Zealand dollar and United States dollar. So New Zealand economy is very dependent on exporting raw materials. As a result, the New Zealand strength correlates with the price of gold. So this is New Zealand, and the countries they come from, NZD is from New Zealand, USD is from United States. So the pairs they correlate with, we have Euro USD, New Zealand Japanese yen, and old Japanese yen. The type is a major currency. So further more detailed is that NZD is from New Zealand. The bank is Reserve Bank of New Zealand. The nickname is Kiwi. The average daily turnover is 16%. And here we have also been looking at this. You can read it. United States Federal Reserve System back, greenback, and 84.9% on average daily return. So let's talk about the United States and the Canadian dollar. So this is the United States and Canadian dollar. So Canada's economy is heavily dependent on exporting raw materials. So here we see raw materials. As a result, the Canadian strength correlates with the price of oil. So USD CAD. USD is from United States and the CAD is from Canada. So the pairing is United States against Singapore dollar. But now this is an emerging pair. You don't even have to go for it, like I told you, and even USD and Turkish lira. So now this is old Swiss franc and USD Turkish lira. So the major type is the pair type is the major currency. It also carries low spread and is nice to trade normally. So when we look at its further depths, is that this is from USD is from United States. The central bank is Federal Reserve System. The nickname is greenback. Average percentage of daily turnover is 84.9. And on the CAD side, the country is Canada. The central bank is Bank of Canada. The nickname is Lonely Tony. Average daily turnover is 5.3%. So we have the United States dollar against the Swiss franc, CHF. So let's look at this here. So the Swiss franc became a safe currency in times of crisis because it's one actually of the most safest countries to ever live in, if you didn't know, Switzerland. And it has its history of remaining neutral in times of war. So wars don't affect it, and thus the most of the money safetiness is always put in Switzerland, Bank of Switzerland. So the franc remains a safe currency, and spike in price can be seen during geopolitical crisis. So the country USD is United States and CHF is Switzerland. So most of you might be thinking that maybe since this Switzerland should be SWT, like the currency. No, it's pronounced as CHF. When you see it, it's the Swiss franc. So the pairs that it correlates with, we have the United States dollar against the Singapore dollar, Australian dollar against the CHF, and USD against the Turkish lira. So we'll be seeing it as a major in pair type, a major currency. A further detailed table is that we see that this is from Switzerland. The central bank is Swiss National Bank. The nickname is Swiss. Average daily turnover is 6.4, and here USD we have been seeing it already as average daily turnover being 84.9. The nickname being greenback. The central bank being Federal Reserve System, and the country being the United States. So let's look at the USD and JPY, which is the pairing of United States dollar and the Japanese yen. So the USD JPY is one of the major pairs types and is the second most traded from Euro USD. Now this one follows being the number 2 in the world. So Japanese has the third largest GDP, gross domestic product, after the United States and China. So since Japan's economy is driven by its exports, the country prefers a weak yen to increase international sales. So it's also a good currency that we shall be focusing on. Euro USD, USD JPY, and probably AUD USD. And others, of course, the GBPs also, they bring returns. But I told you this is the game where you have to be extremely careful with money management, trade management, if you really want to succeed. And there is very much money and easy money to make in the Forex markets. So let's look at the countries. USD is the United States and JPY is the Japanese yen. So pairs they correlate with, we have New Zealand against the Japanese yen, CAD against the Japanese yen, and the euro against the Japanese yen. So the type is the major currency. So let's look at the more detailed where we see that the country here for USD, of course, is United States dollar. We see the bank, central bank being Federal Reserve System, the nickname being the buck or greenback, the average daily turnover being 84.9. So for Japanese JPY, the country is Japan, the central bank is Bank of Japan. It doesn't have a nickname, and average daily turnover is 19%. So those are the major currency pairs, and we should be focusing on them because of the low spreads they carry and because of the stability they have. These are the ones that we shall be using in trade management and risk management. The cross pairs, we are going to be looking at the currencies below here. So cross pairs are one that do not include the United States dollar. So where every currency that you see without a USD, just know this is a cross pair. So we are going to talk about the odd pairs, like how we see them here: odd CAD, odd JPY, odd NZD. Then we look at the CAD, JPY, CHF, JPY, Euro odd, Euro CAD, Euro JPY, Euro TRY, GBP odd, GBP CAD, GBP CHF, GBP JPY, NZD, JPY, Euro CHF, and Euro GBP. So we shall also be looking at how they correlate with one another. Basically, if you want to trade them, so cross pairs are also good. They carry some of them carry low spreads, though we are not going to be much conversant with them in trading, but you have to know about them because some of you might be interested in trading your currencies depending the country that you might be in. So let's talk about the odd and the CAD, the Canadian dollar. So this is the pairing of the Australian dollar and Canadian dollar. So the odd and CAD are considered two of the top three commodity currencies. So with odd correlating with gold and Canadian dollar correlating with oil, these correlations create an interesting dynamic when trading odd CAD. So as traders can use gold and oil as safeguard or as an indicator of future price action for in these pairs. So when the gold has increased in price, we can know that the odd is also going to rise, whether it is against the dollar or the JPY, it's going to rise. So when it is the best currency, you buy it. When it is the hot currency, you sell it. So we see the countries, of course, it is Australia and Canada where these pairs come from. So these are the pairs that they correlate with. So odd CAD correlates with odd USD, odd CHF, and USD JPY. So the pair type is that it's a cross pair. So this is like a table which clearly shows you that the odd is from Australia, the CAD is from Canada, and the odd, its central bank is called the Reserve Bank of Australia, and the central bank is Bank of Canada for CAD. So the nickname for Australian dollar is the Aus. The nickname for Canadian dollar is the Ronnie or Tony. So this is the average daily turnover 7.6, and this is a 5.3. Look at the odd Japanese yen or odd JPY, odd JPY. So this is the pairing of the Australian dollar and the Japanese yen. So the high interest rate in the odd in comparison to that of JPY makes odd Japanese yen a popular pair to carry trade. Of course, in also these minor currencies is that you can also trade it due to the fact that it has also those economic factors of the high interest rates, which make it to be more of tradable by the banks and also the hedge funds. So a carry trade involves buying a currency with high interest rates in hopes of earning profit off the daily swaps payments. So although losses are certainly possible, to perform a carry trade in odd JPY, a trader would simply open a buy position. So basically you have to understand about these economic pairs and how you can balance them. So this is the odd JPY. So here we look at the country is Australia and Japan. and these are the currencies it correlates with. So we have the NZD, New Zealand dollar, and the Japanese yen. We have the Canadian dollar and Japanese yen, and also the Swiss franc and the Japanese yen. So the pair type is a cross. Got further details of the Japanese and the Australian dollar, Japanese yen and Australian dollar. So this is from Australia. The bank is Reserve of Bank of Australia. The nickname is ONCE, and its average daily turnover is 7.6. Then this is Japan. The bank is Bank of Japan, and it has no nickname, so it remains the JPY. So its average daily turnover is 19%, which is good. So now let's talk about the Australian dollar and the New Zealand dollar. So we look at this being the pairing of the Australian dollar and the New Zealand dollar. So NZD stands for New Zealand dollar. So the Australian dollar and New Zealand economies depend heavily on exporting raw materials, making these countries' currency strength depend on the commodity prices. So for the Australian dollar, we know that it's basically in gold. Then New Zealand has products of like wheat, then dairy products also. So the countries Australia and New Zealand, of course, and these are the pairs that they correlate with, where we have the Great British Pound and the Swiss francs. Great British Pound against the New Zealand dollar and Australian dollar and the Swiss franc, and the type is the cross pair. So when we look at a further detail is that we see that, of course, we have been looking at this. Now this is New Zealand. The bank is Reserve Bank of New Zealand, and the nickname is Kiwi. Its average daily turnover is 1.6, and this, of course, being the same as 7.6. The nickname Aussie. Reserve Bank of Australia as its central bank, and the country is Australia. Now let's look at the Canadian dollar against the Japanese yen. So this is the pairing of the Canadian dollar and the Japanese yen. So since Japan is the third, we look Japan being the third largest net importer of oil, and Canada is the sixth largest oil producing country. So oil prices have considerable influence on this pair. So both of them dealing into the commodities, that is oil. So they make this currency also a unique one. So the countries is Japan and Canada. So pairs that they correlate with is we have the New Zealand dollar and Japanese yen, Great British Pound, Japanese yen, and the euro and Japanese yen. So the pair type is a close pair. So let's continue and we look at more of its depth. So this is the Canada, the country. The central bank is Bank of Canada. The nickname is Ronnie or Tony. Average daily turnover is 5.3. So here the bank, the country is on Japan side. The country is Japan. Central bank is Bank of Japan, and no nickname that it has that we know. And the average daily turnover is 19%. Now let's look at the Swiss franc. This is the Swiss franc, CHF, and JPY. So CHF and JPY is the pairing of Swiss franc and the Japanese yen. So the Swiss franc is a safe currency that gains in value during the times of social and geopolitical crisis, while the yen is manipulated by the export-reliant Japanese government. So Japan's dependence on export drives the government to weaken its currency. So look at the drastic moves in this pair during the times of crisis, probably like 2022, 2023. There has been a lot of economic crisis, and we look at how these currencies have been moving. You know, they have been doing a lot of spikes and just consolidating without specific direct movements of the market. So the countries is that we have the Switzerland and the Japan. So they correlate with Euro JPY, NZD JPY, and GBP JPY, and the pair type is a cross pair. So we have the Swiss franc against, so this is a more detailed table, which is with CHF, the country is Switzerland, the national bank is Swiss National Bank, and the nickname is the Swiss. So giving a daily average turnover of 6.4. The Japanese yen, the country is Japan, bank is Bank of Japan, and the nickname is Nan, giving you the average daily turnover of 19%. Now let's look at the euro against the odd. So this is the pairing of euro and Australian dollar. So the euro is the second most traded after the United States dollar. So this we shall be covering them later when we go in practicals, and why we should actually be trading these most traded currencies. So the Australian dollar is the fifth most traded currency. As a cross currency, euro odd is fairly liquid and experiences its greatest activity during the euro US session. So time sessions, we shall cover them and also see how you can time your time session according to the country that you are in. So, and when the Australian data is released during the Asian session normally happens late night in the country where I am. So this is the let's look at the countries. So euro is in eurozone. We have many countries including Germany, we have France, and all those countries that are using the euro. So here we have Australia. The pairs that they correlate with is that we have euro JPY, USD, euro USD, and euro CHF, and the pair type is that it is a cross pair. So let's look at its table in a more detailed way, where we have the EUR, the euro. Of course, the countries, the eurozone. We are specifying all the countries that lie under that use the euro as their currency. So the bank is European Central Bank. The nickname is the fiber, and average daily return is 39.1. So the odd is the countries Australia. The central bank is Reserve Bank of Australia, and the nickname is also giving a average daily return of 7.6%. Yeah, so now let's talk about the euro card, which is the pairing of the euro and the Canadian dollar. So Canada's economy is heavily dependent on exporting raw materials. So as a result, the card strength correlates with the prices of oil. So this cross-currency pair experiences its greatest activity during the euro and US sanctions, and it's subject to movement based on European and Canadian news announcements. So when we look at the countries, of course, it's Eurozone and Canada, and they correlate with Euro GBP, Euro JPY, and CHF JPY, and the type is a cross pair. Now, the depth of it is that the euro, of course, it's from Eurozone, the central bank is European Central Bank, and the nickname is fiber. The average daily turnover is 39.1. So the card country is Canada, and the central bank is Canada, Bank of Canada. The nickname is Ronnie, and the average daily return turnover is 5.3. Now we have the Euro CHF, and this is the pairing of the euro against the Swiss franc. So it as a safe haven currency, the franc is the subject to movement during the times of social and geopolitical unrest. Otherwise, the pair is usually most active during the euro and the US session. So the countries being Switzerland and Eurozone pairs it correlates with, we have Euro JPY, CAD JPY, and Euro GBP, the pair type being a cross pair. Now in depth, we look at CHF countries, Switzerland, bank is Swiss National Bank, and the nickname is Swiss, giving average daily turnover of 6.4, and here we have 39.1, the nickname being fiber, the central bank being European Central Bank, and the country being the Eurozone. Now let's go to Euro GBP. We need to understand this also more. So we look at it being the pairing of the euro and the British pound. So Euro GBP is very popular cross instrument that experiences aggressive moves during the euro and US session. So as you can still see here is that during the euro and the US session is that we need to be extremely keen with our trading, because more of currencies can give us good pips where we can earn good amount of money. So the countries is Eurozone and United Kingdom. So we have the pairs that they correlate with these ones. We have Eurocard, Euro JPY, CHF JPY, and the type is a cross pair. So more detailed, these are the things that we have been looking at almost from each pairs. The country is United Kingdom, Bank of England, the nickname is sterling or cable, and the daily average turnover is 12.9, here being 39.1, nickname fiber. Central bank is European Central Bank, and the country being the Eurozone. So let's look at the Euro JPY. So it is the pairing of the Euro Japanese yen, and Euro JPY is extremely volatile, that it can move as much as 250 pips in one trading day. So this means that if you know how to trade it and you have its strategy, you can make lots of money out of this pair alone. So the euro is the second traded currency, and the yen is the third after the United States dollar, nicknamed the YAP or UP. So that is Euro JPY, is most active during again the Euro and the US sanction. So the countries is Eurozone and Japanese yen. So pairs they correlate with, we have the CHF JPY, CAD JPY, and GBP JPY, coming to the type of a cross pair. So now these are the countries we have already looked at and named them already in the previous pairs which I've been talking about. Now let's go to USD and the Turkish lira. USD TRY is the pairing of the euro and the Turkish lira. So this exotic cross is affected by news releases out of the Eurozone and economic conditions in Turkey. So as an emerging market, Turkey is expected to experience rapid growth and modern industrialization. This may prove to have an effect on the TRY, the Turkish lira. But now this is not a good currency that you should be trading, because it carries high spreads and it also moves slowly and doesn't return really anything. Like I can't promise you that it's a good currency that you should be trading. I just give it to you so that you can know about it, the knowledge. So the pair is a cross pair, so knowledge, it's not accurate. The currency they correlate with are not accurate. So here let me talk about it. The country is Turkey. The central bank is Central Bank of the Republic of Turkey. Nickname it doesn't have, and average daily turnover is 0.7. So it's very less, of course. So now let's talk about the GBP and odd. So it's the pairing of the British pound and Australian dollar. So the pair is most active during the euro and US sanctions, and when Australian data is released, some notable news releases affecting the pair include the Australian RBA rate decisions and gross domestic product, the GDI, as well as the UK trade balance and CPI. So GBP odd, of course, the countries United States, United Kingdom, and the Australian. So the pairs they correlate with is GBP NZD, GBP CAD, and GBP USD. So the pair being the cross pair, of course, as I have been looking at this, we have already covered most of these ones. So we have the GBP CAD, which is the pairing of the British pound and the Canadian dollar. So this pair is most active during the Europe and US sanctions. So some notable news releases affecting the pair include the Bank of Canada rate decisions. So we shall be looking at these ones in the fundamental analysis and the EV purchasing managers index, as well as the UK trade balance and the consumer price index. So it's from United Kingdom and Canada, and these are the currencies they correlate with. Seeing GBP USD, GBP NZD, and GBP odd, and the pair is the cross pair as we look at it. So of the GBP and CAD is that GBP, of course, is from the UK, as we can see here, and Bank of England, then it's cable sterling, then we have the the average daily return being 12.9, and here we see average daily return 6.8. The nickname is only Bank of Canada, then the country is Canada, like how we have actually been seeing. So let's proceed to GBP CHF, which is the pairing of the Great British Pound against the Swiss franc. So we saw that Swiss franc is the safe haven of the currency, especially during the times of social and geopolitical unrest, and also the economic recessions. So some notable news releases affecting the pair include the Swiss National Bank monetary policy assessment and consumer price index CPI, as well as the UK trade balance and retail sales. So these are the countries: United Kingdom and Switzerland. The currencies it correlates with GBP NZD, OD NZD, and GBP USD, and it's a cross pair. So when we look at the further detail, it's the same as how we have been looking backwards. Country of GBP and CHF, the bank, the nicknames, and the average daily return. So let's talk about the GBP CHF, which is the pairing of the British pound and the Swiss franc. So also we know that this is a safe haven. At the moment we have been looking, where you see Swiss franc, you just know that it's the currency of safetyness, especially during the economic and geopolitical arrest and bad times of that happen in the country. So also this is affected by the same news, UK trade balance and retail sales. So let's talk about the NZD-JPY, the New Zealand and Japanese yen. So it is the pairing of New Zealand dollar and the Japanese yen. So the difference in interest rates between NZD and JPY makes NZD-JPY a popular carry trade, which involves buying with high interest rates. Remember, we shall be seeing these ones in our economic factors when we reach there, in hopes of earning profit off the daily swap payments, although losses are certainly possible. So we have to be extremely careful. So the countries is New Zealand and Japanese. So it correlates with CAD JPY, OD JPY, CHF JPY. So the pair is a cross type, as we have seen here. So this is a more detailed, but we have already looked at these currencies. So these are our minor currencies, and we are going to be proceeding with other currencies when we understand them. So when you understand these currencies, and sometimes you can be well conversant with trading them, or sometimes it's better you have their knowledge so that you can also, when you look at them, you know where they come from, the banks that lead them, and how they perform into the Forex market. Talk about the emerging currencies. So emerging market currencies are from developing countries in terms of the economy and political. So there are special risks that come with investing in emerging currencies. So these are not advisable for starting trades. In fact, they carry high spreads, and I'm giving you these emerging currency pairs for knowledge purposes. You trade them at your own big, huge risk, because they carry huge, very big spreads that you can't even open an order with even $100. Even if you open an order with $100 in just 2 pips, or even a pip, it can take all your money. So you have to be extremely careful with them. So we shall look at these currencies pairs here. The USD and this is Chinese offshore, USD and Chinese yuan, Indian rupee, Korean won, Mexico currency, Singapore dollar, the Turkish lira. In fact, in mine I had put it, if you will make a recap, but it is meant to be in emerging currency pairs because of the high spread is carries, and also Turkey is a developing country. So we have the Taiwan dollar. So we shall also be looking at how they correlate with one another. Let's start with the United States dollar against the Chinese offshore renminbi. Renminbi, you can actually call it the name you want, USD and CNH. So pairing of United States dollar and Chinese offshore renminbi. Is it renminbi? So okay, renminbi. So China is one of the BRIC countries, considered one of the big four. China is the largest in emerging markets. We all know that it's producing lots of goods. So in terms of gross domestic product. So since 2005, the yuan has pegged to the United States dollar. So the Chinese government is expected to increase the flexibility of the exchange rates in the future, which may result in price spike. So we can see that the currency, the countries China and United States, of course, that's how we can see it. We're not sure what correlates with maybe in the coming future, and as we keep on learning the markets, because markets keep improving and growing, and its type is emerging. So let's further look at it here, and we see that this, of course, is from USA Federal Bank. The back or the green bank, the greenback is the nickname. So its average is 84.9% return. So when we look at CNH China, the central bank is People's Bank of China offshore renminbi, and the average daily return is 0.9%. So let's talk about the USD and CNY. So we see that USD CN1 is the pairing of the United States dollar and the Chinese yuan. So China is one of the BRIC countries, what we have already explained before. So it's the same explanation, because Chinese yuan and Chinese offshore renminbi, these currencies are all in China. So they are all performing like the same. So the countries are the same, pairs with no touch rate, and the type is emerging pair. And also here it's the same, the bank is the same, People's Bank of China. And so let's look at the USD and the Indian rupee. So this is the pairing of the United States dollar and the Indian rupee. So India is one of the four largest emerging markets known as BRIC countries. Of course, it's also in developing, as we know. It produces, it's in technology, in bioscience technology, and it's growing a lot in stocks markets, and it has a lot of manufacturing of products like the cars, Tata, and the country has become somehow big. So according to 2010 BIS Trinity Central Bank survey, the rupee grew 42% since 2008. So as the country continues to develop, the rupee may appreciate even more high. So the countries is United States and India. So this is Indian manners. Of course, you can see it's Indian rupee. So we don't know the currency it correlates with, and the type is emerging. So for the dollar, we have been looking at it, and here we see the countries India. The Central Bank of India is called Reserve Bank of India, and the nickname is NAN. So we see average daily turnover, which being 0.9%. So we have the United States dollar against the Korean won. So let's look at it being the pairing of USD, United States dollar, and the Korean won. The won was initially pegged to the United States at 15 won per dollar, but adopted a free floating exchange rate in 1980. So South Korea's economy has been rapidly growing since 1960s and continues to expand along with other Asian tigers. Of course, we know this is also among the producing of technology like LG, Samsung, and its economy is growing highly. So we are sure that as time moves on, these are going to also reduce on their spreads that they carry. So this is United States against the Korean dollar and the Korean won, sorry, South Korea, the country. And pairs that they correlate with, we are not sure, and the pair type is emerging pair. So This is the country of Korean. It's South Korean. Korean one is from South Korea. The bank is Bank of Korea. Nickname is not sure, and the daily average range is 1.5%, which is very way lower compared to the United States. So let's look at the United States and the Mexican peso. So it's the pairing of United States dollar and the Mexican peso. So Mexico is an emerging power. Experts at Goldman Sachs have anticipated Mexico becoming the fifth largest economy in the world by 2050. So we still have few years, of course, and we are going to see it reaching to become one of the fifth largest economy. So it's good to be investing in Mexico. You can buy maybe shares in most of the Mexican stocks which are open also. If you want more knowledge about this, you can also consult me. Like enough, I have so much knowledge into the stock markets and the crypto markets too. So as Mexico continues to develop, investors eagerly anticipate the future of this pair. So countries is United States and Mexico. We are not sure of how they correlate because they are not yet that much being traded and followed by traders. So the pair is emerging. And so when we look at it, we see it's from countries. Mexico, the bank is Bank of Mexico. Nickname is not accurate, and average daily turnover is 1.3. Of course, for the dollar, we have been looking at it. It keeps the same 84.9 average daily turnover. The nickname is Greenback. Then the bank Federal Reserve System. Then the country is United States, of course. So let's talk about the USD and SGD, which is the pairing of United States dollar and the Singapore dollar. So the difference in the interest rates between USD and SGD makes USD SGD a popular pair to carry trade. So a carry trade involves buying a currency with high interest rate in hopes of earning a profit of the daily swap. That is what we have been talking about. So remember the swaps. When we go back to our terminologies, they are overnight. We have positive and negative swaps. When we are in the direction with the blockers, you can get a profit, but when you're not, certainly, of course, you're going to get a loss. So of earning profit of the daily swap payments, although losses are certainly possible. So the countries is you have United States and Singapore, pairs that correlate, not accurate, and the type is emerging pair. So when we look at it furthermore, here is that we see it's from country Singapore. The central bank is Monetary Authority of Singapore. Nickname is not accurate. Average daily turnover is 1.4%. So we have the USD TRY, so which is the pairing of United States dollar and the Turkish lira. So as emerging market, Turkey is expected to experience rapid growth and modern industrialization. It has already started. So Turkey has experienced a dramatic increase in its GDP since 2001, even throughout the period of global recession. That was 2008. There was another global recession in 2022, 2023, but still it is developing slowly. So this growth may provide to have an effect on TRY. So the countries are United States and Turkey. So pairs, it's not accurate, and the pair type is emerging. It's an emerging, of course, currency. So when we look at the country, of course, yes, we have been covering it. Now let's look at this country being Turkey, then the bank being the Central Bank of Republic of Turkey. Nickname we don't have, and it has 0.7% as daily average turnover, which is very small. So let's look at the USD and TWD, which is the pairing of the United States dollar and the Taiwan dollar, known as one of the four Asian tigers. So Taiwan experienced rapid industrialization and economic growth during the latter half of 12th century. So this period of time is known as Taiwan Miracle. Taiwan imports energy needs due to its lack of natural resources, and therefore TWD, which is Taiwan dollar, may be affected by oil prices. So when you be doing its research as you want to trade about it, you should also do the researches about the oil barrels, how they are working from Saudi Arabia to Canada and all these countries that produce oil on a larger scale. So countries, it's US and Taiwan, and pairs they call it not accurate, and here the pair type is emerging. So when we look at it more here, we see that of course TW is Taiwan, the central bank is Central Bank of Republic of China. The nickname is Kuei, and it has 0.5% average daily turnover. So those are the emerging currencies that we have. Though there are very many others, still you're going to find the Russian rupees, the South African rand. There are so many emerging currency pairs, but I give you a caution of don't trade them if you don't trust your pocket, and don't trade them again even if you have a good strategy, but they can move a small movement against you and you're gone. And they are too unpredictable because they are very volatile first of all, but now they have less participants. So these are controlled specifically by big banks where they place orders. That's where the market immediately goes. It's not like where many retail traders are also participating in the market. So let's look at the commodity currencies. And here we are going to see that commodity currencies come off with the world's prices of primary commodity products. So due to these countries' heavy dependence on the export of certain raw materials for income, so the commodity currencies, we have these, where we have this is the silver, ZAG is silver, and ZAO is the gold. So let's look at them in details. So let's note that it depends on the export of certain raw materials for income. So these countries depend on exporting the raw materials so that they can be exchanged for the income. Talk about the ZAO USD, and this is gold USD. It conveys the value of gold compared to the United States dollar, like how we are seeing it here. So we should know that traders attempt to profit from the fluctuations in the price of metals, or use these instruments as a safeguard against inflation or commodity pairs. Actually, these currencies, the gold, most of the time during the economic recessions, people normally invest in them a lot. And of recent, people have also started investing in more cryptocurrencies, holding the bitcoins, the Ethereum, and of course that also I'm going to teach about it separately, and you're going to see the course coming about the cryptocurrencies and how you can really make money from them. I'm a teacher of all these finances. So now the countries of this, it's United States dollar, of course. United States, sorry, that is the gold, which is pairing, and it normally pairs to the dollar and also the euro. Of recent has been pairing to the euro. So this is the pair, and the pair type is the commodity, and it's a very good currency. Trade, it's profitable, but you should be very keen because it's highly volatile. What do I mean by highly volatile? It can move very many pips in the shortest period of time, which can lead to big losses or big profits if you're not careful. And you should always use very small lot sizes if you don't have enough equity in your account. So now let's look at the ZAG. The ZAG conveys the value of silver compared to the United States dollar. So the silver instrument correlates closely to gold, but unlike gold, can be traded for smaller spread cost. Yes, that's the fact. Traders can attempt to profit from fluctuations in the price of metals or use these instruments as a safeguard against inflation. Much as silver is also available for trading, I don't really recommend you to be trading silver. No, I don't recommend it. It carries a very big spread and its movements are very slow. They don't return a big amount, but you will be coming across it. So when you come across the ZAG, you have to know that this is the silver pair and it's a commodity. It's under commodity currencies. You can also find it paired to the euro, ZAG, EUR, or other currencies, because now currencies that are becoming more stronger, they are pairing them to the commodities. Now let's talk about the commodity currencies. Are from let's start from here. Commodity currencies are from countries that possess large quantities of commodities or other natural resources. For example, gold, oil, and also we have the silver price. So we see prices can be dependent on natural resources because these constitute the country's exports and increase its economy. Let's give here the example. So when gold goes up, the US dollar in most cases goes down and vice versa. So from way back, gold is an alternative or reserve for the United States dollar. But I told you that of recent, cryptocurrencies are coming in to become most of the safe haven for the people's investments during the times when the dollar is down. So we should be extremely keen and diversify our resources always. We can invest in the gold, but also invest in the cryptocurrencies. So gold prices are somehow related to the United States dollar. So let's look at example 2. Oil is leveraged to the dollar and may fall 10%, 25% in the case of the currency gain is 5%. So let's look at example 3 here. So United States dollar against the Canadian dollar, USD against the CAD plus oil prices. So Canada is actually the second largest oil exporter in the world. Saudi Arabia tops. So this shows that CAD currency is relevant to this commodity. So US is the large dependent of oil. So its rise and fall has impact on both currencies. So sorry about this. So in case prices increases, Canada benefits, hence strength of its currency. So let's give the final example, which is 4. We see gold strengthens old CAD. So Canada is the third largest gold producer, and Australia is the third largest exporter of gold. So when gold value increases, of course, the old CAD are meant to be wronged. You can buy them. Where you find the odd being or the card or the odd being the court currency, there you can sell it if you see that the gold value is really high. So that's how you can also trade this.